Richard, thank you for coming to join me today for Payments Unpacked TV. You and I, we've known each other for what, I don't know, 20 years? I haven't got a
25,
clue. 25, wow. But there'll be a few folk watching today that haven't come across you before. So just introduce yourself, please.
So hi, I'm Richard Ransom. I head up solution consultancy for corporates for Bottomline globally. I'm also one of Bottomline's industry leads, and I've been working around BACS payments for 27 years now.
Perfect. I think we can rightly call you a subject matter expert.
Thanks.
So we're looking forward to what you've got to share with us today. So Richard, we're squatting. We're squatting in a solar dome in the middle of Thomas More Square. This was once the home of Pay.UK. They've moved on to new places. In the last few months, we've found out that new payment architecture project or program has failed. We're seeing the PSR merge into the Financial Conduct Authority. And out of all of that, we're seeing a new design co and retail payments infrastructure being formed to design a new retail payments infrastructure for the UK. With that backdrop, in this massive time of change, what's your view or your take on the future for retail payments infrastructure here in the UK?
It's taken a very long time to get us to this point where we realised things weren't working. So 2016 was the starting point of the MPA, and it seemed to go through a lot of failed processes. So something had to give. So the ideas were right, that the payment systems are very similar, and there are lots of ways in which service could be enhanced by putting these things together in a more coherent way. We could look at faster payments and BACS being very similar in terms of their actual job and put those together. So those things were right. So the way forward is going to be really important. We need to get it right because there's a whole lot of industry experience and it's starting to disappear, especially around things like corporate payments. Not a big focus of the words and the documents around the NPA, but really big focus of huge volumes of payments going through the UK. So 5 billion direct debits nearly pass through the back system. So that can't be ignored in this process. So whatever happens, BACS, direct debit, direct credit can't be an afterthought or we'll have a look at that later or parked. It has to be central to the choices that are made now around architecture. And the needs of businesses need to be taken account as well.
I think that last point is really important, isn't it? Sometimes as bankers, as payments people, we get lost in the weeds of what a payment system should look like, what a standard should look like, how the infrastructure should be built, and yet we forget about the needs of corporates. How can we really tag into understanding what a corporate is looking for in payments?
Well, I think there's a lot of opportunity. As we said, there's still some experts out there. There is a really good community of solution suppliers for BACS software, but there's the opportunity to ask corporates as well and really go to town in those conversations. And corporates isn't just merchants, the people who make lots of retail payments, it's manufacturing, it's telcos, it's other utilities. These are the important people to talk to and get their view of. What a bank sees from a payment is a perfectly formed file at the end of the day. To get to that perfectly formed file, there's so many processes and so much background information and legacy systems that might have been there since Y2K. Got to consider how difficult it is to move from one thing to another if you're not consulted. So being given a fait accompli and you've got 2 years to move is going to be very difficult. So when BACS Still IP came around, so the last big change to BACS, when we went from modems to the internet.
I remember those days well.
The ask of the corporate was more or less, you've got to change the connectivity, but the file format stays the same. So the connectivity bit could be sorted by someone else. Now we're saying, potentially, you've got to change the file format as well, and all of your process to match this new thing. So that's got to be done with consideration. So if the timeline for a replacement for BACS or faster payments is 2 or 3 years, or 4 or 5 years, corporate's got to be in there right at the start. That consideration of where those 5 billion direct debits are going to go, the 2 billion direct credits are going to go, really, really important.
Richard, my next question to you is about cards. And the backdrop to this question is that we've got open banking, we've got account-to-account payments, we've got variable reoccurring payments. They're all solutions that are gaining traction in the payment space. And my question to you is, do you think these new open banking and open finance consent-based payments will replace cards altogether?
I can't see it happening in that way. There's never going to be the need to replace cards and the card rails entirely. In fact, the card rails will start to come into this account-to-account space as well, and we're starting to see that. But fundamentally, retail point of sale, there has to be a choice. And today I wouldn't use an account-to-account payment mechanism because it doesn't really work for retail point of sale. in the future, if there is one, if it's easier than me just tapping my phone and double clicking my phone and it, looking at my face to make the payment, then I might think about a non-card based payment. But at the moment, card based payments are fine. I don't have a problem with them. In fact, they just work. So this is my feeling is they can operate together. They've got different positives and negatives, but they'll definitely operate together.
So if it's not broken, don't fix it.
Exactly.
But actually they can coexist and do different things.
Yeah.
Perfect. My next question, or my question let me ask you was posted on TikTok.
Yeah.
So one of my followers on TikTok have got a question specifically for you. His name is Ross. And his question is, does Richard think traditional payment rails like MasterCard and Visa are under threat from direct payments?
I don't think they're under threat. I think that they need to evolve and are evolving because of the way that account-to-account payments could work. So those things that are the secret sauce of cards today, that immediate money changing hands, that's there in account-to-account payments if it's done right. So you need to get to the split-second response and authorization to make it really compete. But I don't think they're under threat because we still need card. Transactions and credit cards are still useful because of credit, and you don't necessarily get credit with an account-to-account payment. Account-to-account payment is it's out of my bank account now. For some payments, I really like that. For other payments, I'm going to do it on my card because I want to pay it monthly. So these things have to be considered as well.
Okay, well, thanks for your question. And Ross, thank you so much for asking the question. Yeah. As payments go fully digital, what are the risks and the opportunities for corporates over the next 5 years?
Well, I think corporates have actually embraced digital payments more than we realise. There is still cheque use in the UK, so I think 91 million cheques last year. However, it's not corporates who are making those cheques. They're not doing those payments. It's very small volume. So corporates will embrace that digital change as fast as they can. What doesn't help is the legacy systems are sitting in their back office. So it has to really, really matter for them to invest money in it. The areas of business that do the most payments and collections, accounts receivable, accounts payable, these aren't profit centres. They're just a cost to a business, a cost of doing business. So for them to get any budget to move forward is really difficult. I think their customer demand will drive that change more towards digital payments. But I think they're doing okay. And if you compare it to other sectors of society and other types of business, I think we're in a good place, to be honest.
So corporates are in a good place, but consumers have got a role in encouraging the people they buy goods and services from to embrace digital. Exactly.
I think if you look at cheques, there's a lot of cheques still produced because people still definitely want to have that piece of paper, or they think they do because they haven't examined.
Okay.
They haven't scanned a cheque. They don't realise how easy it is to cash a cheque, or they haven't had a look at digital alternatives to cheques, which are very prevalent now.
Okay, we're going to come back to cheques later.
Excellent.
A bit of a hobby horse of mine, so let's recircle back to cheques a little bit later. So another question raised on this time LinkedIn, and it was from Ryan on LinkedIn. And his question to you today, Richard, is he's asking whether you think there's a single citizen-based use case for retail CBDCs here in the UK.
That's a really great question from Ryan, because I spent a lot of time looking at CBDCs, and now so stable coins are very much of the moment now, and tokenized deposits. These things have just come out of nowhere over the last 6 months. Corporate treasurers are starting to talk about them seriously rather than it being I don't have to explain what they are now because they know. So there's a lot of hype definitely around cryptocurrency, and the CBDC seems like a really good idea. It's a wallet that sits with Central Bank. It's not owned by a bank. It allows you to do everything that a bank can, but we have to remember that we still have banks, and CBDCs aren't there to replace banks. They're going to sit alongside. So I think the use case that works for me is the unbanked and the financially excluded, giving them an ability to have a digital payment method. Now, all the things that sit within potentially cryptocurrencies like programmable payments, the ability to say, right, I'm going to pay my rent based on this out of this payment pot, or having some sort of escrowed payments. These things are really interesting, but they're not anything that just a CBDC can do. I think the one thing that CBDC can do really well that banks don't want to do or can't do, or it's very difficult for them to do, is around the financial inclusion and the unbanked.
So a bit about financial inclusion, a bit about the unbanked, and maybe some edge cases around things like programmable payments and things like that?
Yes, but for other citizens, I think we still have banks. It's just going to be another competition. I don't really need another wallet, I don't think, at the moment.
I think I'm with you. I think, well, I might have a tokenized debit card from my bank on my phone and I'm doing things in the wallet. I might want to, I don't know, put some money on a prepaid debit card when I go abroad for my holiday spending. And then why would I need a wallet with a CBDC issued by the central bank in that? I'm sort of a bit with you on that. Let's see what happens over the next few years. But Ryan, thank you so much for your question. So I'm going to ask you a question about new payment architecture, a subject that we've been discussing in the building behind us so many times over so many years. It's absolutely clear that NPA didn't deliver what many had hoped for. And perhaps my question, as we look to a new way of looking at retail payment infrastructure in the UK, what went wrong with the NPA programme? If we are going to really modernise infrastructure going forward, what do we need to do right going forward?
I think what fundamentally went wrong was not looking at faster payments and BACS together to start with.
Which was the original scope.
Yeah, and that scope changed, and then it was faster payments first. So real-time payments are more interesting and more exciting and affect people rather than businesses, but these things need to be looked at together. I think the number of times that procurement happened meant all the really good players started to fall out the process. And it was just a lot of disappointment. So everyone could see where we were trying to go. So the NPA still chugged along, even though PSD2 appeared and open banking appeared, and all those things that were going to impact it. And then suddenly it was like, we better shoehorn in A2A payments because that matters now. And I think fundamentally, it wasn't... the world was moving on, but all that governance was made really difficult. And it did need someone to go, right, we just need to stop this now. We can't have 3 procurements for the same thing. And a situation where we might have secured someone for the procurement. We're going to tell you very soon. We're going to tell you very soon, and then that went dead. And then it was like, no, there's no NPA. We're going to park that. So I think it got too messy too quickly because the real initial vision for it didn't get carried through. It got diluted. Now, whether that was because of regulators and when PSR appeared midway through this process, whether it was regulators, whether it was the bank, whether it was the PSPs, the card schemes, lots of people probably contributed towards it becoming a bit of a mess of opinions and no progress being able to be made.
So let's jump forward. We've got PVDC forming the Retail Payment Infrastructure Board. What do they need to get right this time? What lessons should they be saying? Well, that's the lesson we learned from the old world. As we do this new thing, what should we be doing? I think
that real obvious published plan. I think you cannot keep this stuff out of the public domain and outside of your of industry experts. There are so many experts in payments in the UK at the moment, and it's vital we use those. You can look to the future. We need to remember that there's a lot of experience, and that experience has got so much knowledge, but will help to move this forward. The plan is so important, and making that public and allowing people to be consulted on it, but for that not to be a months at a time process. It has to be done really quickly. It's got to be agile in the sense of we've got to do it quickly, at scale, but also it has to be sensible. We can't have pauses and gaps and 4-month consultations because that doesn't help the process. So absolute vision is an important word there, but the vision has to be met with the plans and just visibility for everyone on it. I think that's what they've got to do right. Make everyone see what the working parts are as it goes along. And I think the Bank of England could do a job as well. So FMID, and I won't go into financial markets, infrastructure directorate, play a big part in these decisions. So we need to make more of the part that they play and let them be a bit more visible as well in terms of the decisions they're making, because that can slow things down. As soon as you slow things down, you lose momentum, lose inertia, and then boom, we are back where we started.
Okay, so some great sort of recollections of why NPA might have failed, and some good hints and tips for the newly formed Retail Payments Infrastructure Board, and then the design delivery company that will sit below that. Exciting times, but yes, you're right, agility, yes, you're right, transparency, yes, you're right, a clear plan. and some key success factors to be agreed. But no, thank you for your comments and your views on that. We look forward to a new retail payment infrastructure here in the UK.
Fingers crossed, within the next 5 years.
Let's hope we don't have to fingers crossed too long, but no, thanks Richard. So we had a really blunt, on-the-nose question from Mike over LinkedIn, and the question is really short. It says, Richard, give me one reason why billers should move away from direct debit.
So one reason is your customers don't like direct debit. And that could be because the demographics are wrong, because they are more used to credit card and prefer that, or because their income is a lot more variable than direct debit will let them use. So they want a lot more control around payments. But it's around the customer and not the whole billing system. And it's never going to be all of your direct debits moving to an alternative type. Direct debit and commercial variable recurring payments and card on file are very different. They're very different positives and negatives. So lots of people like the fact that with a credit card you can get the money, first payment to account is almost immediate, same with variable recurring payments. But a direct debit has such a mature process. The actual management of the direct debit as it goes through its life cycle is so much better with direct debit because it's a really understood process. And things like changing your bank account doesn't get in the way of that collection happening all the time. And if someone collects too much money or on the wrong day, you've got redress, there's consumer protection, which is really obvious, and it's spelt out to you every single time you sign up a direct debit. So it's going to be your customers will decide if you should move off direct debit as a biller.
So you're telling me that there's no wholesale case for migration in large chunks with billers going from direct debit to VRPs, but there will be edge cases or where direct debit is sort of a round peg in a square hole.
Yeah, exactly. And I think there's in the evolution of direct debit, and I really do hope it evolves with the new role of Pay UK. Let's hope they can put some more focus on it, because I think the NPA probably lost a bit of focus on our schemes. The things that don't work about direct debit are first payment to account. So when you sign up a direct debit, you've got to wait. Now, that initial traditional 10 days period is way down to 3 or 4 days now. But you still got to wait for the money to hit your account, or you have to use an alternative payment type to do it. That people don't like that. And finding out about failures. So if a direct debit fails, you don't find out why it's failed for about 5 days after that payment's failed. And with credit card or variable recurring payments, it's going to be immediate. So those two things, if you can fix those in direct debit, then you've got a really, really good billing system that ticks all the boxes of control, sign up. That's when it really works.
Okay, well, I know that people from Pay.uk read my newsletter called Payments Unpacked. I know they watch these videos. You've just given them two good hints and tips of ways of enhancing direct debit to make it even more ubiquitous and even more the favoured and predominant way of paying for those regular goods and services that we buy. So let's see what they do with those two things. But Richard, thank you for sharing those. Richard, we've seen that open banking has gained significant traction in retail and SME use cases, but from a large corporate perspective, we're seeing them still relying very heavily on the established payment rails like faster payments and BACS. And I was interested in what type of fundamental shifts in technology, in regulation, in business models would we be needed for open banking to be something that corporates as enterprise scale users adopt?
Well, I think there's some fundamental changes need to happen to the whole of supply chain. So for open banking to work better than a regular scheduled payment, we need some form of e-invoicing regulation. So you need to have somewhere where that pay me now button sits in your invoice,
or even request to pay,
request to pay, or some sort of agentic AI machine to machine transaction. That's when it starts to work. But today's payment systems are so well ingrained. So if you're a business and you send an invoice and you have a lot of trust with the person that you are selling to, then they're going to pay, and they're going to pay on time because you build the terms into the contract, and people typically pay you on time. So you're not pulling the payment, which is where that open banking comes in. So you've got to fundamentally change the way that invoicing works, accounts payable and receivable works in organisations. We're starting to see some movement towards that. I think request to pay could have worked better if the request to pay had been absolutely tied completely to the payment rather than a separate messaging system. But request to pay isn't really firing in Europe yet, although it's part of SEPA. We've seen it in real-time payments in the US as well. So these things it's kind of getting there, but I think it's going to take a lot of shifting of the mentality, and also back office system change needs to happen as well.
So it's a more fundamental shift
Yeah.
than an organic migration for
Yeah.
those large-scale corporate users.
Yeah, so the Oracles, SAPs of this world have to want to change their systems and the ERPs to do that, and people will want to have to pay for them. So I've spoken to a customer recently whose billing system was put in for Y2K, and at the moment it works absolutely fine. So trying to re-engineer, replumb all that to fit with open banking is very difficult, when today I can send an invoice, someone's going to make a payment to me, and I'll have a set terms. If they don't pay me, then they go into collection. Until these things become really difficult and people really default, and I still think open banking won't reach the really high value payments where something like stablecoin might work in the future. But I think high value payments, regular scheduled high value payments like BACS, you have to have that low value payment system, that ACH in place to make payments work properly. Open banking, smaller value payments, has to be something behind it, like e-invoicing, as I've said, to make that really work. And as I said, AI might drive us to machine payments where that connection is just done. We don't see it. You buy the goods and the payment's made in 30 days as per your terms, but no one has to touch it. No one approves a bulk file to be sent on the last Wednesday of the month.
I guess, it's a case of if faster payments and BACS work well, a new solution has to be better. There has to be a reason to move, whether it's cost or functionality or innovation or functionality. It's got to be something if the base is working so well.
Exactly.
At their peak in 1991, we saw 4 billion cheques being processed annually in the UK. There's about 87 million now in a year. We've seen a transformational change. But the whole point of paying for something with a cheque, it sort of infused trust and commitment in the transaction. Do you think we've lost some of that in the digital world as we've moved to digital payment? Have we lost some of that sort of trust and commitment in two partners working together and making payments?
Yeah, that's really interesting. And what we see from things like insurance, they still like to issue checks and people start to receive them. So it's a major life event, like a life insurance event. Actually, the check is it's a thing, isn't it? It marks the event. And if we look at checks in business, absolutely, as you said, you write the check and you felt that the payer would be good for that money, and you would deliver the service. And typically, that was fine, because if it wasn't fine, that wouldn't have worked. We'd have evolved away from checks much sooner. But it's interesting, isn't it? So we're going to a world where we don't trust anyone with the payments, and you're starting to have to look at things like confirmation of payee and check every single beneficiary, and you're just looking for the fraud and for the error in that process, which is really sad. But fraud is something that will never go away, and it just changes shape as we go along. So authorised push payment fraud has been a real big focus, and confirmation pay will reduce it and is reducing it. In our corporate world, we're seeing some fundamental shifts as well. So vendor data is becoming much more important. We're also seeing organisations looking at sort code and account number information and then tokenising that as well. So taking it away from the accounts payable department or the billing department, sticking it somewhere else secure. So yeah, that does show that erosion of trust, but I think because of the fraud threats that are there, we kind of have more control around the process.
So trust and confidence making digital payments absolutely paramount, both for the persons paying and receiving the money. Things like verification of pay, confirmation of pay, some of the provisions around authorised push payment reimbursement have helped, but you've given us some ideas about how much further we need to go to continue to build that trust and confidence. Yeah,
and it's interesting is that if you wrote a cheque and you decided that actually the person, it was a fraudulent process, you could stop the cheque and the cheque would live forever. You could stop it, more or less indefinite. With irrevocable payments, you can't do that.
Yeah.
So faster payment is made and the money's in the account, it's settled, and then suddenly it's out of the account, it's been swept away. Immediately you can't get that. I think we are in that position, so because of that we have to lock down payments as much as they are.
We can't have a conversation about payments without thinking about standards. Rich heritage from Standard 18 in the 60s, Message 85, 83, was it in the 80s?
Yeah.
And for many years now, we've been talking about ISO 20022. We've been thinking about it for SWIFT payments, for RTGS payments, and now we're thinking about it from a retail payments perspective. And because that standard is becoming increasingly central for digital payments, the use of enhanced data within that standard is often cited as a major benefit for adopting ISO 20022. So if we were to migrate BACS and faster payments to 20022, what should the argument be for that migration? Is it about the use of enhanced data, or is it about something else? Because if we're going to ask people to migrate from one standard to another, it's a huge task, particularly for corporates who are going to have to do lots of stuff. So what's the argument for a corporate to adopt ISO 20022?
So standards are really important, and ISO 20022 globally has become our payment standard. So if you look at SEPA, which has been going for a long time on it, if we look into the US, NATCHA, Fedwire, RTP, if you look to Australia, Singapore, as we look around the world, it's becoming a common standard. SWIFT have moved across to it. That's really important. So interoperability, standardization, so ERPs should be just kicking out one file format for any country in any country. That really makes a lot of sense. I think tying that use case to a business around enhanced data is difficult. So if we look at SEPA, between 10 or 20% of SEPA credit transfers actually carry any sort of structured remittance information. Now, SEPA's been with us for a while, so that just shows me that organically businesses aren't grasping that nettle and go, right, okay, we need to do this. What we are finding is a lot of businesses where more data of the payment is critical are building their own bilateral agreements around unstructured data. They're saying, right, I need to know this information off you, so therefore can you send it with every payment? So it's really difficult, isn't it? And some of the other benefits of remittance travelling with a payment are around, you've got these two bits of information together, but businesses kind of sold that. When checks stopped being the predominant payment method, you'd have a BACS payment and then a fax remittance, and that turned into an email remittance on PDF, and then that turned into machine readable PDF. So now businesses have kind of sorted that thing out. They can put those pieces together. Benefits around things like reconciliation with enhanced data, they're not really being seen by businesses because they're not interested. It's not a big enough problem. When you make a wholesale change, like we're going to move everything from one file format to another, what tends to happen is people will want to do that at their own rate, and there'll be a lot of insulation from that change. So in the ideal world, what the payment systems are thinking is, right, the corporate will produce a perfect pane 001 with the payments in, and that will end up at the bank and turn that into a perfect PAX message. Unfortunately, what will happen is the corporate will still produce a standard 18 file, and then someone will have to insulate them from the change by building that into a pane format, and then the bank will receive the pane format, and then the central payment system might turn that back into standard 18. So there can be a lot of wasted effort in that. But corporates are not suddenly going to go, yes, I'm ISO 20022. That's something that we are seeing. We're seeing a very slow movement, but it tends to be in financial services where.
Okay, so with that backdrop of that answer you've just given, I'm going to give you a magic wand. Would you wave that magic wand and convert current day BACS with standard 18 and current day faster payments with message 85, 83 into a standard ISO 20022 message? Or would you wave the wand differently and saying, guys, those current payment systems, let's just let them soldier on with their current standards, and we'll build ISO 20022 in the new world order of retail payments infrastructure. So with your magic wand, which would you do?
I think I would encourage building the new world order in native to ISO 20022, and not build a system where we're going to be translating from standard 18 or CSV file or something created in Excel into an ISO format and then back out of an ISO format back into the old system. There's no point in doing that. It's just going to create a lot of noise and unnecessary cost for organisations.
So you'd go native, you wouldn't worry about the brownfield sites?
Exactly, and then you prepare over the runway into the new payment system for an ISO 20022 world, so that the ERP and other billing system providers can move with that process. So when you're ready to go and you're migrating corporates, they're going, right, now we're going to pull the lever, the magical 20022 lever, and look, we've got so much data carrying with our payment, not just the enhanced data, we've got things that are going to help us prevent fraud, we've got legal entity identifiers, all that information can travel and be used, not just, we need a format. So it doesn't become a file formatting exercise, it becomes a real change to payments.
Cool. It's going to be intriguing to see the way ISO 20022 translates itself to a new world, but also what the benefits case or what the drivers for that migration will be in the end. But let's watch this space for the coming months. Richard, my last question for you is relating to a subject that you and I have mentioned a couple of times, and that is the subject of a payments champion. It's a subject of somebody who really understands the guts of payments and what's happening. And you've often talked about the need for a corporate to think about appointing a payments champion. As you've talked about that, you've intrigued me, and I guess, why would a corporate decide to assign a payments champion within their business?
Well, it's interesting, and these payments champion roles have started to form organically. So it'll be someone in accounts payable who's just really interested. We'll start to ask accounts receivable or treasury, how do these payments work? What system do you have in place? Could we work together on those? So that's where that payments champion starts to come from. They get real success out of it. Where corporate businesses often have issues is everything is siloed. The payments in live in accounts receivable world, the payments out will live in accounts payable world, and in treasury world as well. So the treasury payments are often not that much different from the AP payments. And we're starting to see those converge a little bit, and treasury in organisations start to be a bit more about the investing and the risk and the sustainability, and they're pushing the payments down the food chain a little bit. The change we're going to come through in the UK over the next 5 years are the things we've talked about today, because what you don't want to do is change the same thing 3 times. You want to do it in one go and have, the industry's looking at converging payment systems because it makes sense to do that. And businesses need to make that decision too. So I don't like to use the word silo, but that's often how organisations work. The payments champion can sit across that and give the organisation a proper strategy for the changes that are happening. And if it's going to be an ISO 20022 world, or it's going to be a real-time payments world, and we lose 3-day, and CVRPs are going to become a much bigger part of payments, or direct debit's going to evolve. These are things that need to be looked at holistically across a business. So the payments champion could come from AP, could come from receivables, could come from anywhere with a billing system, or could come from treasury. But you've got to have a single view in any corporate with what's happening at the moment.
Okay, Richard, thank you. I mean, you can't see behind you, but we've suddenly become famous. There are people outside taking photographs of us in here. But really interesting in terms of that understanding of why a corporate, in the busyness of corporate life, in the busyness of trying to run the business, might think about appointing a payments champion to look holistically across their business and their accounts payable and receivable needs. Thank you. Richard, that's the end of my questions. Thank you so much for spending time talking to Payments Unpacked TV. And I know you're a great supporter of what we're trying to do and get the payments message out. So I really appreciate you coming up to town, of hiding in this solar dome away from the rain. It wasn't what we quite envisaged in terms of location, but it served us well. So thank you so much.
Thank you very much, Mike.
Cool.